Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. All right, everyone, checking in on USMJ, bunch of names to be looking at. So starting it off with the big boy, GWPH, we had the bullish reaction to earnings at all-time highs, and from there, we pulled back pretty significantly down to 172.50, which is the line in the sand, because if that level breaks as we are approaching it, that is going to be a new downtrend on the daily. So we were in an uptrend, we got earnings, a lot of profit taking from earnings, nice little bounce, but it was just a lower high, and now we're dropping down to a potential lower low if 172.50 breaks. If that level breaks, we zoom out to the weekly time frame and say, all right, we're in weekly consolidation. Bulls must hold 150, 132 to keep the weekly uptrend in control. If the Bulls could save it here and hold 172.50, they got to break 182.54 to shift that momentum back in their favor to be looking at all-time highs. But the fact that it took 3 days to bounce and 1 day to give it all back and a close near the low of the day with a little increase in bear volume, all of those lead to the likelihood that we will be entering weekly consolidation on GWPH. IIPR bulls have stood out as very strong in the past week, and probably one of the biggest MJ gainers along with OGI over the last week. And we're looking at the all-time high. 93.24 is certainly within striking distance. We got up to 91.27. Again, if we lose the hourly uptrend before we break that level, then we just need a healthy daily higher low to form. And it looks like we actually did lose. I'd say the hourly uptrend is lost, but 88.27 and 88.25 is a double bottom on Friday. And if that level breaks, then we'll be looking for the daily higher low to form somewhere in the mid to upper $80 range to then have the sights set back on the all-time high as the bulls attempt for continuation. So very strong weekly time frame. Again, you're not going to find many weekly charts for the MJ sector that look like this since December and are still holding their gains. So that is impressive for those bulls. Curaleaf weakness continues. So we're looking down at 12.74. This was the kind of scenario where I was potentially interested, but again, my aggressiveness scaling into oversold bounces matches the aggressiveness of the bears, and we weren't aggressive by the bears at all. We broke support of 13.09 and didn't see much follow through. We bounced and set a lower high at 13.28 and then faded at the end of the day. So it's just not showing me the kind of setup that I like in terms of getting to extreme RSI levels with flushes, and I will be watching for that potentially to happen this coming week. 12.74 is the most important support. That's our weekly uptrend level to try and stay the strongest. And if 12.74 breaks, then we're going to be looking at the potential of a more significant longer-term consolidation. If we hold 12.74, we'll look for a bounce on the daily, and just for a lower high to form compared to 15.30. Anything under 15.30, I would consider a lower high. At this point, it's just about the bulls trying to play defense and defend that level. So if we were to drop down the 2% to get to that support level first thing, then we might be looking at, well, even then, I don't like this setup. So probably going to have to patiently wait for something I do like. And it might be a break of 12.74, head down towards the gap fill of 12.28. Then I'd be interested as things get extreme. But the 4-hour and the hourly RSI are already beat up, so we might not get that much follow through. It's hard for me to put my finger on it exactly why I'm not comfortable here. But perhaps if we break resistance, if the bulls break resistance, then I'll look to play a quick little flip for a few percent, knowing that I'm playing against the trend on the daily time frame. C-Web. So we have the hemp names with a little bit of bullish action comparative to the MSOs on this previous week because of the Texas news that they are legalizing hemp and CBD and making steps forward. So it's an inside bar with a break at 21.40. We look at 21.68 and 22.92, the gap fill. And if we get the bear break of 20.63, we're looking down at 19.90 as the next level. And again, this is a weekly bear flag at this point. And we don't have enough development as far as candles go to look like a bear flag, but you look at it on the daily time frame, and that's certainly a weak bounce after a significant pullback, and it is a potential bear flag we have to be cautious of. TRUL, solid little bounce here. So we had the bearish reaction to the CEO's husband being arrested. That has now seen a decent little bounce, but we're still in a daily downtrend. Anything under 18.10, just a lower high. So what the bulls are going to have to do is going to top out on this move, wherever that is. When we pull back from there, we're going to look for a higher low to form compared to 1455. Let's say our top right now was 1665. And if we break 1617 next week, we'll lose that higher low pattern each day. We'll look for the higher low to form compared to 1455, and the bulls would have to break 1665 to change that trend back in their favor, keeping in mind that we have lost some key support on TRUL's weekly time frame. But again, this is the kind of time where we want to be looking at the longer term monthly charts as well, and we are just looking for a monthly higher low to form. But as long as that daily downtrend is still intact, the bears have control, and that has been the case since the highs of April. A lot of these US MSOs and a lot of Canadian names as well have pulled back big time from the highs in April, and we are looking for monthly higher lows to form in the sector and patiently waiting to see what this summer is going to look like as far as potential for consolidation. Can the S&P 500 get back to all-time highs in the face of all these trade war headlines? That remains to be seen. IAN still weak. So again, bear's not aggressive the last couple days, so I have not looked to add. But if we get a clear bear break of 568 and some follow through, again, as I've talked about in recent videos, the daily RSI is down at historic bounce levels. We're looking for the long-term pattern is the framework of any decisions we make. And I am saying that it is most likely that we're going to see a monthly equilibrium. That being said, there's a ton of space where we can pull back and still be within this equilibrium because 471, make that 450, is that support. So anything above 450 is a monthly higher low. So I'm looking at the potential of daily oversold conditions to give us a monthly higher low. It's the same kind of scenario I'm looking at on Cron, and I'm going to try and position myself for that possibility. So just like I did last time here, daily oversold, sell partial position, and this sell I sold about 2/3 of my position, put my stop loss down below break even, which again we still haven't hit. We can break, and we could probably drop another 15% before I'm going to be break even because of that flip. But I will be looking to do the exact same thing. Enter an oversold position, look to sell some on the flip, playing counter the daily and weekly trend, and then look to hold and hope that the monthly higher low forms sooner rather than later. Of course, still protecting the trade, but giving myself a lot more space to work with before that break-even point. CL, we're still watching the 2-day time frame for some nice condensed view. We have our low of 1416, high of 1837, higher low of 1477. Anything under 1837 is a lower high. This is a weak bounce attempt at this point. This is not what the bulls want to see as far as follow through. The bulls definitely wanted to make their way up towards $17, which we have not done. So looking at it on the daily, if we curl over here, we must hold 1477 and then see continuation. We must follow through here to stay in that tightening equilibrium, because if that's the size of the bounce we're going to get here, that definitely favors the bears, that we're probably going to break 1416 if we cannot change this daily trend to try and get back into the middle of this range. OH is the same thing, but it had a more convincing pullback. Again, just looking at the 2-day chart because it's condensed. If that's our lower high, again, that's a red flag, and breaking 1085 and 1077 would lose our weekly uptrend and would have us look for monthly consolidation. So some key support tests are coming. Bulls must hold 1085 and turn around and break 1188 to try and stay within this tightening range. GTII weakness continues. Again, monthly time frame, we're looking for a higher low to form. It's an equilibrium setup like a lot of other individual names, but anything over 1008 is a higher low. That's 65% of space. We could pull back and drop 30% on GTII and still be in this monthly equilibrium. So the framework is there, but there's a lot of space to work with in between, and trying to time that is, again, my strategy is very clear with the oversold bounces and exiting into some profit, and GTII is approaching daily oversold. You can see the last little bounce was right from the RSI 30, and again, same thing. Look at the bounces off of 30 RSI. Historically, that is where we see some nice little turnaround. So we're going to be watching support of 1628 and 16 psychological. Anything on the daily under 1779, just a lower high. And if we do drop down and break 1628, that daily RSI will very quickly be oversold at that point. MedMen, still clinging on to the all-time low. We have a double bottom down at 313 and 311, but we're not really seeing the bulls do anything. They're just playing defense at this point. So anything under 356 is just a lower high on the daily, and we'll see if we get a new all-time low within the next week or so. have to change the daily trend to have any hope of that double bottom remaining. KSHB, due to the hemp exposure, actually I take that back, KSHB is the bottling company. Either way, it had a good week. So anything under 534 is a lower high. And by bottling, I mean packaging company. So anything under 534 is a lower high. If we were to break, or I should say be unable to break 534 and start to pull back, that's the scenario where we look for an inverse head and shoulders pattern to form with the left shoulder. Head, if we top out and can't break resistance, we'll look for a right shoulder to form and a higher low on the daily time frame. And looking at the monthly chart, what are we looking for here? An uptrend. So bulls need to hold 437, and we're holding 457 at this point. So I'd be interested in this pattern. I'd like to see best case scenario, top out here or soon, pull back, form a higher low in the upper $4 range, and then see a bull break. And I might look to play that bull break knowing that the monthly uptrend is still intact. CVSI. So CVSI has clear resistance. Anything under 515 is just a lower high. It's a similar setup. Well, I take that back. Not really. So anything under 515 is a lower high. Our short-term support is down at 458 and 460, a little double low. And the bulls are trying to shift this momentum back in their favor. We do technically still have a weekly uptrend. 433 is the must-hold level when we bounced off 444. That's a higher low, but we have seen significant 2 months of consolidation. Let's see if we can get a daily trend change for the bulls to give us our weekly higher low. We would certainly just be looking for a weekly lower high, even if we do bounce, but key support test nearby, and the bulls are trying to build a base of support here in the mid $4 range. NBEV, definitely worth watching in the coming weeks because a volume spike and a break is imminent. The range is 505 to 541. We've been within this range now for 13 days. Look at the volume, just non-existent. So keep an eye on that volume because that volume spike is going to tell us when the real break is taking place. Looking at it on the weekly time frame, not really a good equilibrium. Low, high, higher low, lower high, holding support of 502. I would be looking, if we do get a bull break, I'd be looking for a lower high compared to 613 to stay in this tightening weekly range. Let's just see if it looks a little bit better on a different time frame. The 2-day chart, a little bit better. So we'd be looking for a lower high compared to 613, but we would have to see the bull break first. NBEV spike likely this coming week. SLNG is also trading fairly sideways. 218 and 219 is a double bottom and the must-hold support level. It's a bit of a descending triangle with a horizontal base of support and just lower highs every little bounce as the range continues to tighten. Anything under 254 is just another daily lower high staying in that tightening range. A break at 218 is a clear bear break, and we will watch to see if the bulls can break the downtrend on the daily, because if not, we will lose the weekly uptrend. And that'll be a big red flag. There's not a ton of support here. 187 is the next level it stands out. So 218, very important for the bulls to hold. And even if we do hold it this time around and see another bounce, we will still just look for a lower high compared to 254. Volume significantly dropping off as well. PLTH continues weak with a bear flag confirmed on the daily. So I'm interested now in PLTH for the reason of knowing the longer term pattern is a weekly uptrend. Anything above 170 or 176 is a higher low. Bull volume on the way up, exceeding the bear volume on the way down. No red flag there. So we're looking for a weekly lower high. Daily oversold conditions are approaching. Daily oversold, looking for a weekly higher low, is like hourly oversold, looking for a daily higher low. It just shifts the odds in our favor to be a little bit more forgiving in the sense that we can be confident a short-term bounce is going to be underway. Whether that's our weekly higher low or not, and we're going to get significant follow-through, we don't know, but we can put ourselves in positions to potentially see that follow-through. But at this point, watching that RSI with the next support after 236, looking down at 225. Anything on the daily under 277 is just a lower high. So I personally would be waiting for hourly RSI to be oversold, which it is. 4-hour RSI is oversold. And if we see another little red day on Monday or Tuesday, we're going to be looking for oversold here as well. Just a reminder, in this video, Canada is closed on Monday. US is open. So the US tickers will be trading and they will have more information and more price information than the Canadian names. So for next week only, I usually default to who has more volume. The dollar volume guides the ship, but we can get more information with the USMJ tickers, or I should say the US listed tickers on all these names next week. So next week, we have to be watching those US tickers closely for that extra information. PYX, saw a little bounce after breaking support, Bulls always love it when we break a support level and don't get follow through. And that has us keep an eye on the other direction. Anything under 20.55 is just a lower high, keeping the bears in control of that clear downtrend. But we're going to be watching for a change in daily trend, which we haven't seen at this point since the top of 32.69. It was just a straight pullback, a very big bounce with no trend change confirmation, gave it all back. I just need a daily higher low and a higher high to see that shift, and the bulls are struggling to do that. Monthly, longer term pattern, we're looking for a higher low to stay in this equilibrium and tightening range, and you can see we're building a base of support in the $16 range here. ZYNE, still extremely strong. This is another one with OGI and IIPR that goes to the top of the list of strength over the last few weeks. Bearish reversal, Gravestone Doji on Friday. Have we lost the hourly uptrend is the first thing I want to know, and the answer is not yet. Anything above 1476 is an hourly higher low, so we're still holding it. If the bulls can't break 1647 on Monday, and then we come down and lose the hourly uptrend, then we look for a daily higher low to form, and anything above 1135 is a daily higher low. So entering on daily consolidation has certainly gone well for any bulls looking to maintain this uptrend, as ZYNE has shown a lot of strength. BAMM, so longer term perspective, we have our high, low, and we're looking for a weekly lower high compared to 371. So have to be cautious of the daily chart topping out. At this point, our daily higher low is 254. If we lose 254, then we can say that our weekly lower high is likely set. 295 is resistance. If the bulls can break 295, we'll say it's not set yet, and they'll continue that uptrend, but just being aware that the most likely scenario in the longer term time frame is for the weekly tightening range to occur. So if we do break that 254 support, patiently waiting for a tightening weekly range. TILT heading back down towards 161 very quickly. The weekly downtrend has been very clear. We're on the brink of all-time lows, just like MedMen, and this is a scenario where the only play is bottom fishing. Whether it's an entry and playing off of 161 support, the only play for bulls, or an entry and a play off the all-time low of 151. Personally, I have no interest in this name because of its inability to shift these trends, and we would have to see a hold of 161 and a break of 237 to change this daily trend. That's not going to happen anytime soon, in my opinion. Best case scenario for the bulls next week is hold 161, bounce and set a lower high compared to 237. Of course, pending any news or anything, but I would expect best case scenario for the bulls would be hold support and then look for the daily range to continue to tighten. So we have a lot of weakness in the MJ sector over the last couple of months. Everybody, wondering, is this the start of the summer slowdown? Everybody's expecting the summer slowdown. I'm watching the S&P 500. As always, that will guide my decisions. If the S&P 500 goes to all-time highs, I'm not going to be looking for a summer slowdown. In 2018, we had the S&P 500 at all-time highs, and we had a catalyst of CGC with its deal to really bring life into the sector again. But even before the deal, in the spring and early summer, before, I believe that deal was August, let's look at it real quick. But CGC saw a 100% move over the early summer without that news' help. So just be aware that it is certainly not a sure thing. And again, in my opinion, it is the S&P 500 that will dictate what does happen. But we did have, let's see, April, we were down at $19, and then into June, we saw a 100% move. And then here's where that deal news came out. But it was a bullish summer. It was a bullish April, May, June, and we currently are in that time frame, but obviously not seeing the same action. So S&P 500 is God as far as I'm concerned with the charts and what is to be expected. And if we see further weakness and break 280 on SPY, then that tells me that the MJ sector is going to get weaker. And longer term entries in the MJ sector, the best longer term entries have been when things have been the ugliest. December was an ideal time to buy when the sky was falling in the markets. So I'm going to be keeping an eye out for longer term entries and slowly scaling in, using those monthly patterns as my guide. IAN will be on the top of the list because of the daily RSI approaching oversold. And again, just being very patient and scaling out scaling in. The last thing that we want to do is put all our money in at one time, because the odds that we nail anything are very low as opposed to cost averaging down into that weakness, all depending on the long-term strategy. Whether you're going off the fundamentals of the company or whether you're playing just the charts, that's going to significantly change what your game plan is. So for me, playing off of the charts, I'm being very patient and I can wait for some daily trend changes, knowing I won't nail the bottom. but knowing that the momentum will be at my back. And that means a whole lot to me, because if I'm entering a trade, psychologically speaking, if I'm entering a long-term trade and I'm red for that trade for the first 2 months I'm in the position, that psychologically takes its toll. It's your account just drops day after day. I love when my account is just a slow, steady uptrend, and I don't like to give back my profit. So I would rather wait until the momentum is at my back, give up a 15% move off of the low, wait for the daily trend change, and then if I'm playing with the trend, my position is green right away. And it's much easier to manage a green position than it is a red one, in my opinion. So I appreciate you watching. Hope you have a good rest of your weekend. We'll check back in next week as always. See you then. Do good things.